Grant Stenger has one of the craziest stories I've ever heard. When he was 13, he tells his mom that he wants to travel the world for his freshman year of high school. Somehow, he meets the son of a hedge fund billionaire based in the Bahamas and works for said hedge fund that following summer.
I've always been obsessed with the games. Really, what is the most competitive game in the world? And in my mind, it is markets, essentially.
He begins his undergrad at USC, interns at Jane Street, and then drops out to build Kinetic, a decentralized crypto exchange aggregator backed by Sequoia and Jump Trading.
We really are producing sort of like arb-free trades for our users. If it's centralized, you just don't know how the code is being run. And so there are some very suspicious things that probably are happening. But if it's a decentralized exchange, that means that across 1,000 nodes globally, everyone has to run the exact same software in order to get this kind of global consensus.
You seem to be extremely obsessed about the game you're playing.
There's so much to do. There's so much to build. Like I could live 100 lives and it certainly would not be enough.
Grant, thanks so much for doing this. You interned at QuantRes as a quant trader before you started university. That's not common. How'd that happen?
Yeah, so I guess there are two stories that weave together here. One of which, I grew up, reading a bunch of quant biographies. Ed Thorpe has been one of my lifetime heroes. Initially I got into card counting. I was in middle school into card magic and these kinds of things. And my grandfather taught me how to play Texas Hold'em and poker and all these kinds of things. And so I got into this sort of intersection of mathematics and cards, and that brought me into Ed Thorpe. And Ed Thorpe goes from beat the dealer to beat the markets, and then you learn about Princeton Newport partners and all these kinds of things. And so kind of got obsessed with reading every hedge fund biography that I could get my hands on. More Money Than God was kind of one of the first ones that kind of broke me into all of those stories. And then from there I've read probably a book on like each of those individuals in particular. So that's kind of like one part of the narrative. The other is I kind of bizarrely went to a traveling school my freshman year of high school. I saw this traveling school called the Think Global School, which, I found out about it in seventh grade, and then eighth grade rolled around and I said, "Hey, mom and dad, like there's these crazy, kids that are going, they're international and all of this, I want to apply to this." And they kind of never imagined that I would actually, get in and go and all these things. But they were, very, very supportive. And, it's a different country every trimester. And so I was in Central India and then Eastern Africa and then Hiroshima. But it was started by this billionaire, secretive, quantitative hedge fund manager who lives in the Bahamas. And so, his son was a senior when I was a freshman, and we kind of had bonded over times in Hiroshima, and in the hallways in our Indus International School in India. And so I basically said, "Hey, I'm obsessed with learning about quant finance. I'm so young and such an outsider." And so he let me do an internship in the Bahamas with him, and I had this really great mentor named Thomas Callahan, who really took me under his wing. He's a Stanford PhD and really taught me like what is an order book. And I learned Python for the very first time there. And I feel like as a young intern, you don't really add a lot of value. And so I feel like I have a huge debt of gratitude to pay back to everyone who sort of bet on me as a young person there.
That's pretty insane. I agree 100%. It's pretty. I mean, first of all, pretty impossible to add value as a young intern, especially only in high school. And that's a pretty wild story. Um, what are some of the first things you learned there that made you want to pursue this thing, more in depth, let's say? So, I mean, because you worked at QuantRes, and then we'll touch on all the other experiences you had, Numerai, Jane Street. But what are some of the things that really, got you curious about this space?
Yeah, I've always been obsessed with the games, and even in undergrad, I did a lot of reinforcement learning research to try to crack game playing, chess and Go and Connect Four and poker and all these things. I've spent a lot of time thinking about this. And really, what is the most competitive game in the world? And in my mind, it is markets. Essentially, you have you know. Uh, the citadels of the world. There are hundreds of PhDs and petabytes of data, and it's really it's just, yeah, the smartest people with kind of the highest stakes. And so I think I could live a very happy life in 100 parallel lives doing physics or being a chess player or, being a tennis player, whatever it might be. And so, I really like games and it just seems like the best game. And so like for, me to kind of pour my life into studying one, it's just kind of the most fascinating to me.
Fully agree. And I think a lot of people discount the competitive aspect, the game playing aspect of the markets and trying to beat the markets. And I think, so often people boil down people want to do well in the markets as just these greedy bastards who want to make a ton of money. When at the end of the day, it's the competitive spirit. It is the desire to beat number one in a domain where it's extremely, extremely, extremely difficult to become number one in, precisely because, all the incentives are in place for everyone to pursue competition. Um, I want to talk a little bit about, so you were at QuantRes in high school for a little bit. Then you studied at USC. And at USC, you interned at Numerai. And I remember listening to an interview where you talked about how you met, Richard Craib. Now, I've listened to his podcast on the Lex Friedman podcast. Uh, how did that happen, and what was it like interning as a machine learning engineer at Numerai?
Yeah, Richard Craib has been another one of those, legendary mentors for me, and I owe a huge debt of gratitude to him as well for betting on me as a young person. I met Richard through a poker tournament that was actually down in L.A. at the ex-mayor of L.A.'s home with a bunch of fancy quant finance people, and so I was clearly the youngest person there, and he was one of the next youngest people. I don't know how old he was at the time. Maybe, I don't know, 28 or something. I must have been 19 or something like that. And so he, must have kind of seen, some of himself and me, and we kind of like, bonded over that. And it was a really exciting time for him to take me under his wing because he was at the intersection of AI, which was, really kind of coming out of the scene, and it's building this kind of AI-based hedge fund, this sort of decentralized Kaggle competition wherein they give this encrypted financial data using this like homomorphic encryption technique, which is pretty interesting if you're curious about that. And people submit their predictions if you're a great machine learning, practitioner, and then you can get rewarded in this particular way. And the way in that which that people are rewarded is actually by having skin in the game. So you can if you think you're a great predictor, you can stake $1,000 or something like that, right? And if it's right, and if you have good predictions, then you can earn part of a prize pool. And if it's wrong, your stake gets burnt. And they use this mechanism that's actually one of the kind of like earliest crypto protocols, maybe not earliest, but I think they founded it in 2016 or something like that, and launched the Numerai token. It was sort of these intersections of some of the most important technologies that I've been kind of studying over the last 10 years, which is the intersection of AI and crypto.
I want to ask you a little bit of I want to ask a little bit about Numerai and about their thesis. So, essentially it's crowdsourcing alpha, let's call it that. People betting, staking the NMR, I think that's what it's called, on their models, and essentially weighting based on that. One of the issues I have, and it's not really an issue, but it's something I find difficult to understand, is Numerai providing all this data to the public to build machine learning models based on that data, um, but it's unlabeled, and so a lot of the, I guess, human judgment where it comes to, let's say, it's interest rates or credit card data, that I feel that can be lost, and I would like to know from you, how did they think about that issue, and how did they try to deal with that?
Yeah, um, there's a huge sort of, gradation between purely statistical firms and strategies, and then more kind of human-based intuitionistic strategies. Maybe on one end, I don't even want to put them on. Maybe in the middle, you have somewhere like Bridgewater, where you get these Harvard history majors and philosophy majors and these kinds of things, right? And they're kind of shipped off to do some like very niche research about how does the Turkish lira get affected by oil prices or something like that, and they study some very bespoke thing, and they in particular are studying these sort of like causal relationships that you're describing, right? That would be lost by this sort of unstructured kind of like unlabeled data, and so there's a total fit for a type of strategy like that. I mean, we talked about the Bridgewater returns and all these things, but I mean, a historic firm that has, absolutely crushed it. I mean, yeah, Numerai, on the Numerai side. the thesis is really that, there is structure in this data, even if it's not properly labeled. And sometimes, there's human biases where maybe the data says it's the price earnings ratio or it's the beta factor or something like that, and everyone's read all the AQR papers and they've read the Intelligent Investor, and they think, oh, I want to buy this particular thing because Ben Graham told me this thing, or whatever. And then you get sort of crowding in these particular types of strategies because there's a sort of like, these strategies kind of permeate the zeitgeist and people are sort of doing very similar things. But if it's maybe purely statistical, then you don't have those types of effects at play. Richard might describe that completely differently than I would, but that would be kind of my take there.
And so after Numerai, you interned at Jane Street, and I believe that was your junior year. Correct me if I'm wrong. Or in between sophomore and junior. Correct me if I'm wrong.
Yeah, junior year summer. It was 2020 COVID year.
Ooh, wow, wow. So junior year summer, you interned for Jane Street, and the last guy I had on the podcast, or one of the last guys I had on the podcast, rather, was an ex Jane Street trader, Gus LeBron. I saw in your reading list that his book, The Laws of Trading, is up there, and I could fully agree. I thought it was an excellent book. Um, and I think, and this is something I said to him, a lot of people think when they think about Jane Street, especially they've been in the news, but they just see it as like all these IMO geniuses doing these things that are impossible to comprehend for the average mind. Um, what was your experience in the intern class slash cohort of Jane Street like, and what are some of the things that you learned from it that you didn't expect to learn?
Yeah. So firstly, I loved it, and it's so fun to be around a peer group that are interested in similar types of problems, and all the mentors, they really kind of care about the internship experience because, I mean, they pretty much, and I think this is pretty much publicly discussed. So they almost never hire anyone who's not an intern, right? And so they get a ton of data about you over the 2.5 month sort of internship experience, and then they kind of make their decision in this very kind of high informational way, and that means that they're able to really retain people for a very long time. And you can maybe juxtapose that with some other firms. I never worked at like a Citadel or something like that, but there's sort of a pretty high turnover. I have a lot of friends that were there for maybe a year or two and got the yank. So that's it's a different sort of model, and it means that they really pour a lot of time and energy into the Jane Street trading experience. So I would highly recommend it for any kind of aspiring quantitatively oriented college kids. In terms of the things that we learned, I mean, there's so many things about markets that are maybe unintuitive, and really just learning the vocabulary. So one of the games that Jane Street invented is this game called Figgy. Figgy is like a kind of Jane Street staple that's different from a lot of these firms. Maybe like Sig, for example, they play a lot of poker, and it's a lot of kind of Texas Hold'em based curriculum. But Figgy is this sort of um, it's modeled off of an open outcry market, so almost like the Chicago, pit traders, type trading experience where there are 4 or 5 players, and you're sort of bidding for these things, and so you're quoting these, I'm 3 bid spades, or I'm offering 5 for diamonds or something like this, and so you're kind of quoting these spreads, and you can make a lot of your money in this game by sort of capturing this this spread that you're quoting, and it really teaches you how to be a market maker in this kind of toy example. And so I think it's a very kind of valuable game if any kind of like young aspiring traders want to kind of get a couple friends together and try to learn it. They even just made a digital version of the game as well that you can play online, which I've definitely cracked into a time or two.
So you've talked about Figgy at Jane Street, and you mentioned Sig making their interns play poker, and also how you met Richard Crabe while at a poker tournament. Do you think that these games help a lot? Well, I mean, I think it's pretty universal that people agree that these games help a lot for trading, and especially for um, building. The type of thinking is very similar. Why do you think that is?
Yeah, maybe as compared to chess, where chess is a complete information game and it's really training your computational abilities. I think in the early days of computational programs playing chess, a lot of the value is just from these tree-based search methods and just not making mistakes and not going down lines that are just like kind of strictly bad. And then there's this sort of like intuitionistic part of chess where you see positions and you see, okay, that just doesn't feel right based on my kind of repository of thousands of games or millions of games for maybe the Magnus Carlsen's of the world or something like that, right? And that's where some of this like deep Q learning comes from, and the sort of like AlphaGo stuff. It's really just conditional on the board state. Is this a good position or not? And so they kind of combine those models. Whereas poker, it's a game of incomplete information, right? And so you can't model these things completely through. And this is much more akin to the real world, where there's complete incomplete information sort of all over the place, right? And you have to make these kind of risky decisions. Risky in the sense of they're not always gonna pay out, but you need to make them. To play like EV positive or like game theory optimal poker, you need to be bluffing some particular ratio, and if you're not bluffing, then you're like strictly losing because there are all these types of things that you learn from the game of poker that maybe you wouldn't get from a complete information game like chess.
I fully agree. And one of the books I loved was Thinking in Bets by Annie Duke,
Yeah,
where she applies the principles from her poker career to life. And I thought, when I first read it, I thought it was the most fascinating way of analyzing, of analyzing the way to make decisions in life. And now this might be a bit more of a challenging question, but you know, you worked as a quant trading intern at Jane Street. You've done multiple quant trading internships, quant research internships at Polychain. I'm doing more crypto stuff. It seems to me that if you were optimizing for wealth, you could have easily stuck it out at one of these firms rather than study your own thing, where the variance is extraordinarily high. Especially, you started in 2022. Um, you know, DeFi is not as trendy today as it was a couple of years ago. There's so many macroeconomic factors influencing the business you're in. Tell me, why did you start Kinetic? What problem were you trying to solve? And do you think it's a plus EV decision, I guess, from a wealth perspective?
yeah. Bunch of thoughts here. One, I would say, optimizing for, EV with your wealth is actually the wrong thing to optimize. You need to be optimizing for log wealth and the sort of like geometric growth rate of your wealth, in which case there's like some, variance, inclusion that needs to, kind of be pulled in. And so if someone is actually just doing a pure EV calculation on how much am I going to get paid on my startup or something like that, I think there are treacherous waters. And famously, Sam Beckman-Fried does all these Twitter threads saying, oh, I'm sort of, risk neutral or something like that, and instead of risk averse in these ways. And so I strongly suggest log well utility. There are all these like ergodicity guys that they're talking about this and all that. So that's one piece of the puzzle there. Another piece is, there's a meta level learning that I've kind of pulled from, reading all these quant biographies and all these things that I kind of really enjoyed as a young person, and even studying the history of Jane Street themselves, right? Like it's, no surprise the Jane Street was founded, I don't know, 94 or 95 or something like this, right? At the same time that, the S&P 500 was birthed and, ETFs were sort of coming onto the scene for the very first time. And they were able to build expertise in an asset class that was young at the time and that has since grown many orders of magnitude. And even when I studied the history of at Dorp or something like that, right? Like he was trading pretty much options. There were warrants sort of at the time, right? And so he was trading this sort of new market structure that hadn't really been explored that well and would continue to grow. He shut down Princeton Newport Partners, but there's firms sort of in his wake that the I think there's a big lesson actually in picking an asset class that is sort of in its infancy and really kind of riding that tail wave. And for me, the obvious one is just like every asset is going to get tokenized on chain. I think we're going to have tokenized equities and treasuries and forex and all these things, and they're going to be tradable on these kind of permissionless blockchains. And the upshot of that is you're going to get a lot of these like very native crypto assets. And so we're building in the Solana ecosystem, our trading platform, which I can, talk about it a little bit. We trade over 1 million tokens on the platform, and we'll hit 10 million sort of in the blink of an eye in terms of the total number of tokens that we support. And so I just want to ride the wave of, becoming an expert in this particular asset class that I think will, dominate the next few decades.
That's fascinating. I want to hear more about, because obviously there are multiple DEX aggregators. I guess if you could start, just for our audience who might be unfamiliar, what is a DEX aggregator and what specifically do you do at Kinetic?
Yep. Yeah. So Kinetic, initially and still is a DEX aggregator on Solana. So there are these three pieces which we can kind of discuss in sequence. So DEX, what does DEX mean? DEX means decentralized exchange. Sometimes compared to centralized exchanges, which they say is CEX. Sometimes people say SEX. So DEX and SEX. And in the wake of the FTX explosion, right? We've learned that structuring crypto exchanges in this centralized exchange way can cause a lot of problems. Even though FTX was raised all the Sequoia money and all these things, and was kind of the beloved sort of white knight of the crypto ecosystem in some ways, right? Maybe not in other ways. They completely blew up, and that's because users didn't have custody over their own assets. And this is just a fundamental primitive that is necessary, I think, for internet capital markets to flourish. And so, we are very excited about this decentralized exchange world. Okay, so the next piece is aggregator. That ties into one of the issues with decentralized exchanges is there are many of these things, right? There are dozens and dozens of these different types of decentralized exchange with different sort of market structures. So you can have a CLOB, like a central limit order book, which is typical to traditional finance. You can also have this AMM structure called an automated market maker. This would be like Uniswap, if anyone's familiar, or in the Solana ecosystem, there's one called Radium, and there are a number of these. And so we have all these different designs, and they're on all these different chains. That causes the liquidity to be fragmented, even if it's for the same asset. Like imagine if you're trading the Ethereum token or something like that. If you just pick one of these particular DEXs, you're only accessing that particular liquidity and not the sort of global set of liquidity. And so imagine if you can instead split your order across a number of these different decentralized exchanges. Imagine 10 of them or something like that all at once. You're going to access 10 times the liquidity, and in consequence get you know much better slippage on your 5 times better slippage or something like that, sort of depending on how things work. And so that's why DEX aggregation is a very important piece. And this last one is we're on Solana, and Solana was basically just the first time that it really felt like transacting crypto as the pure internet. I mean, there are 400 millisecond block times as compared to Ethereum's 12-second block times. 12 seconds, you're really sitting around, you're thinking, did I lose my money? Did it disappear? Did I make a mistake or something like that? But in 400 milliseconds on Solana, the time to finality is going down even further. It just feels like, the kind of, blink of an eye is whatever, 150 milliseconds or something like that, right? And so it feels very, snappy and crisp, and it's just been an amazing ecosystem to build in.
So at Kinetic, I was doing some reading and I had to look at what you guys are doing. It seems you're targeting more retail traders, whereas I feel like the issue of liquidity comes from more institutional players, wherein the orders are genuinely large enough to where it makes a huge difference. I was wondering, why is that the case? And I guess why are you targeting this specific niche? Like, what is it about retail guys that you think, this is who you want to target?
Yeah, it's a great question. So I can characterize it as this sort of continuum across like a particular dimension of sophistication. So maybe on one side, you have the kind of most retail looking customer, typically more mobily based, trading, tens or hundreds of dollars per swap or something like that. Pretty like global in nature, maybe, I don't know, Indonesia, Nigeria, those types of places for like the hyper kind of retail focus. And yeah, that's kind of like one ICP or sort of like ideal customer profile over here. Then we have the middle, which is really kind of where Kinetic sits, and that's for traders like maybe you or me. The traders that have already learned about the crypto ecosystem, have some exposure. Maybe you already have a Solana wallet. They're doing $10,000 trades or something like that. They care about price impact, but they're also not going to maybe spin up their own, automated trading systems or something like that, and their own kind of, deep architecture. And then the most sophisticated, ideal customer profile would be these quantitative trading firms or these big crypto wallets or these big institutions that they don't care about the front end at all. They just want an API. In fact, maybe they'll download a executable binary or something like that and co-locate that in their, data rack somewhere. and they just want access to on-chain capital markets as easily as they can. And something like Kinetic would be a great service to them, so they don't have to write API integrations into the 15 or something like that biggest Solana DEXs. They could just go to Kinetic. We'll just give them a nice API, and we'll allow them access to those markets. And they're doing these CEX DEX arbs, or imagine if Solana and one of these particular DEXs is trading at $100 and is trading at $105 on Binance or something like that. They already have that infrastructure set up that they're capturing a lot of these arbitrages. And so an API layer from Kinetic would be really, really good. But I think strategically starting in this middle where we, have a more desktop focused front end for these types of retail traders, honestly, like myself, right, that we can provide kind of support for these, very impressive and sophisticated firms, but also kind of push down and make a mobile experience and support, really kind of getting more people onboarded into the crypto ecosystem. It's been a really strong strategic position for us.
100%. I mean, you have to start somewhere, and you can't just go after everything at the same time. Where does most of your volume come from? Does it come from these guys in the middle? I don't know. Do you service huge institutions, trading firms? Do you service basic no knowledge retail guys? Would love to hear more.
Yeah, right now we're in this kind of middle category, and there's another dimension which you can kind of think about, and that dimension might be the how like long tail the assets are. So maybe at the top with my fingers, these are the majors. The majors being like Solana or stable coins or something like that. Super high volume, super very liquid as far as these tokens go, and highly traded. And then you get this sort of middle. Maybe these are the kind of crypto infrastructure tokens like the Radium token or the Jupiter token or something like that. That's kind of this middle category. And then you have this kind of crazy long tail of all these brand new tokens that, got listed 10 seconds ago or something like that, that maybe you have friends who are flipping these things in the Solana trenches or something like that, right? We started as primarily just being a really great way to trade these, kind of major assets, very low slippage, low fees. I mean, it's literally been free on our platform. And so that's been an amazing kind of, cohort for us. And so it's this like kind of middle quadrant of of sophistication and then these majors. But we've really pushed down into the stack where we have this trenches product now, and we support all of these tokens as they come along, within 1 second or two slots or something like that in the Solana at times. And so we have a lot of infrastructure set up for that and analytics and all these things such that we can help people, snipe something at $1,000 market cap that's going to run to 100 million or something like this.
Wonderful. And I don't know if it's too soon to ask a question like this, but it seems that, if you're building a DEX aggregator, or if you're building let's say a centralized exchange within the crypto space, it feels like, if you were building that sort of thing, you'd have so much, such big an informational advantage on the way the crypto markets move that, I mean, I can reference FTX, but obviously that didn't go too well. It almost just makes sense to have a trading firm on the side. Do you trade like your own crypto book, I guess, on the side and use, I guess, some information from the exchange you're building to inform a lot of those trades? Why or why not? And then I guess on top of that, where do you see what is your long-term vision for Kinetic?
Yeah, great question. So, uh, couple pieces. One, I definitely, trade all the types of Solana assets from the majors all the way down to these trench type products, these brand new kind of mean points, just so I can, be a great builder of this type of infrastructure. I need to see, what types of analytics would you want to see, and how do I improve the latencies, and how do I kind of move the pixels around just and like make it as beautiful of an experience as possible. And so, for the purposes of like just building the best possible trading platform for internet capital markets broadly, it definitely makes sense for me, me to be kind of actively trading these things. In terms of the informational advantages, one kind of interesting piece of being a DEX aggregator and doing all this fancy, graph theory and convex optimization and sort of all that stuff is, we really are producing sort of like arb-free trades for our users. Because if there was an arbitrage, left after they do a trade, then we could actually it would just be a better route that we've constructed for them if we just like close that arbitrage and gave it to the user or something like this, right? And so our users are really getting they're producing no arbitrages. And so there's no sort of like NEV to do or something like that, or back running our users or anything like that. Like it wouldn't be possible for us. And so I think we're sort of like, anti NEV or MEV. I don't know if your listeners are, it's sort of the crypto version of high frequency, like, the high frequency trading, like HFT games that are being played. And so, for that reason, we can't like front run our customers' orders or anything like that. Like that would just be, terrible for our business and really not possible based on how we're doing the routing. But if we were to spin up our own trading firm just based on a lot of the like analytics that we have, it's totally possible. I think, we provide a lot of very sophisticated analytics for our users, and I've been thinking a lot about um, uh, some of this like collaborative filtering for wallets. So like conditional. This is also not something we talked about publicly yet, but a really cool feature that we'll be launching very soon is, conditional on the assets in your wallet, right? And the assets that everyone else owns in their wallet. You can sort of recommend an asset that a user doesn't yet own, but would own based on our information about other users. So this is sort of like how Netflix recommends movies to to people. Hey, you've watched these 7 action movies, you haven't seen this 8th one, users like you would like this thing. And so, we can recommend, tokens to users. We can also recommend users to users. So like, what is a user that's similar to you based on this, latent embedding, like vector representation of your kind of user. And you do this like cosine similarity thing for the user. You can also say like, how are tokens similar based on this, like latent embedding and cosine similarities and all these things. You can even recommend to token projects who is the person that's most likely to buy this thing that hasn't bought it yet, so you can help like people bootstrap communities. So I mean, we're doing some like really cool analytics, and it would be, pretty helpful if we wanted to kind of spin up our own kind of prop trading operations.
Fascinating. That's the first time I've ever heard of something where you're essentially building to recommend, other tokens that, based off the user, based off of the tokens they've owned prior and similar users. That's the first time I've ever heard anything like that. I'm definitely gonna go home and think about that one. Um, I guess, I asked a bunch of questions in the last one, and I didn't really give you an opportunity to elaborate on this, but what is your long-term vision for Kinetic? What you want it to be? And I guess before that, do DEXs make money in the same way that centralized exchanges do?
Great questions. So I'll answer that final one, and then I'll answer the kind of like, what is the kind of purpose of Kinetic and what's the kind of grand vision. So firstly, how do these decentralized exchanges make money? Is it like centralized exchanges? Yes and no. Typically, they will take a trading fee, and so if they have not launched a token, in which most of them have, then they're just kind of taking fees down to the C corp or something like that, and that looks a lot like a centralized exchange. But a lot of these do have a token, and so the Uniswap token or the Radium token, what they do is they take, 2 or 3 basis points of the trading fee, and then that goes back to, programmatically buy back the Radium token or the Uniswap token. And so instead of like, in equities, you'll have, either dividends paid out or share buybacks. It's like this continuous share buyback mechanism, but like, frequently for the revenues going to buy back the token, and that kind of produces this nice upward trajectory. But centralized exchanges also make money in very maybe bespoke and unsightly ways where they are charging a lot to have your token listed, and they take the I don't want to, name names, but a lot of those guys are taking, I don't know, 5% of a token supply to list on these kind of major exchanges and these kinds of things. And they have these back deals. And a lot of those guys actually do have their own trading firms. And who knows how they're handling, liquidations of leverage and all these things. And they're definitely seeing the kind of full state of the order book in ways. And like, if it's centralized, you just don't know how the code is written or how the code is being run. And so there are some very kind of suspicious things that could be happening and probably are happening. But if it's a decentralized exchange, that means that, across 1,000 nodes globally, everyone has to run the exact same software in order to get this kind of global consensus. And so everyone knows the exact microstructure and exactly how everything operates. And so there's just kind of no room for teams to, do anything kind of suspicious like that.
Should we have seen um, the fall of FTX coming? I remember speaking to a hedge fund manager in Hong Kong because I was in high school at the time. And it's funny, I'm currently sitting in an office that used to be FTX's head office, the
No
executive search in
way.
Hong Kong.
The Hong Kong office. That's crazy.
Yeah, yeah, exactly. And when I was in high school, because my dad my dad works here. Um, I would come to the office every now and then to visit him. I'd maybe go to the order like a matcha latte after school, and I'd always see these guys in like these FTX hoodies, slides and socks. Even though it was a professional office, professional setting, where these guys would pull up in like sneakers and like classic tech bro aesthetic.
Oh yeah.
Um, but I remember there's this one hedge fund manager I was speaking to in Hong Kong, and he was saying, what SBF has done is very impressive, but I would never keep much money in FTX. They're non-regulated, they're centralized, they can do whatever they want with your money. And I mean, in hindsight, he was correct. And I'd love to hear from you. Do you think in hindsight, we should have seen it coming? And are DEXs the future of, let's call it crypto trading?
Yeah, it's a super, super nuanced point. So, the, Sequoia investors who, wrote them, a bunch of checks, should they have seen it coming? Candidly, I didn't, right? Like, I would have invested in FTX probably. I thought it was just one of the best businesses of the decade, and in many ways, it probably was. They didn't actually need to commit the crime and like how it actually got tried. You know, it's it's almost like a sign of intelligence and agency, to you can sort of, judge a person by, like, how they view the kind of, like, SBF trials. Like, some people just see, convicted felon, and they think, like, basically everything that that guy's ever done is wrong. Going to Jane Street was wrong, his socks were wrong, his haircut was wrong, everything that he ever said was wrong. Somehow, they just see his outcome was bad, and they try to just invert everything that he ever did. But I think probably 95% of the decisions that he made were actually probably, directionally good. I think he probably oversized his bets in many ways, and certainly should not have had the, risk, like infinite risk limit for Alameda. They should have just like shut down Alameda and they could have run like a perfectly great FTX business is kind of my impression. So that's all kind of context. I there were a lot of very smart people that I take advice from that were saying in advance, hey, something sketchy is going on here, da da da. But there were also some very smart people that were totally blindsided by this, and I was kind of more the latter. And even to this day, it's not 100% clear exactly how everything happened and all these things. And so it's super complicated. And I honestly think that time will tell, and that story may be rewritten in some ways. Who knows? But it's more complicated than people think. I think people have a like very not black or white, just like kind of pure black view on that story.
Grant, in the 35 minutes we've been speaking, there's one thing to me that stands out about you. And, just from high school to university to dropping out to starting Kinetic to all these different internships, you seem to be extremely obsessed about the game you're playing. And, and I'd love to hear it from you. And this, I guess, this is just more advice to someone who's a bit younger than you, is maybe in university and not sure how to get obsessed about a particular game. What advice would you give them?
Yeah, well, firstly, I feel like, you definitely have the energy and you can kind of sniff it on someone if they're, a live player and, they're kind of, obsessed with making something great. And I definitely sniff it on you. So, kudos to you. So, I think it's all gonna turn out great. To the others listening, I don't know how to sort of like, give all of my energy, but if I were here, I would just shake you and say like, life is so short. Yeah, like, there's so much to do, there's so much to build, like, I could live, 100 lives, and it, like, certainly would not be enough, like, it's just gonna go so fast, and so, man, there's no time to waste, you know?
I'll talk a little bit about your reading list. Because, I remember going through it after, because, I was looking for, right now I'm doing this podcast thing. I'm looking for people to have on the podcast. And so I was on X, just chronically going on, like, clicking an interesting account, seeing the accounts he follows, scrolling through what they do. And I stumbled across yours. And I thought your reading list was fascinating. I saw Laws of Trading. I saw a lot of, great books, which I can't recount off the top of my head. But, you've clearly read a lot. And even in the time we've talked, you said you've You've studied Ed Thorpe's story extensively. You've read, I mean, More Money Than God, I think, is an excellent book. For anyone interested in the hedge fund space, I highly recommend that book. That book, I found I thought was excellent. I'm sure you've read all the other quant books, but on Renaissance. Um, if there's one book that changed you the most, that really challenged the way you thought about things, really changed your worldview, what book would that be?
This is a big one. It's just called Rationality by Eliezer Yudkowsky. It's actually sometimes described as the sequences. I think rationality from A to Z, AI to zombies is kind of the subtitle there. And I think if I were to think about what has shifted my perspective on, I don't know, epistemology and decision making and rationality itself. It's probably that. There's a lot that maybe the rationalist, effective altruist schools get wrong. I'm like not an effective altruist, but I think a lot of the techniques used by these rationalist guys are really strong. And so I would highly recommend it. It's on Audible. It's whatever, I don't know, 48 hours or something like this. It's a lot. There's like a PDF that you can find online. The physical books are harder to get your hands on. I think I only have 2 of them. I think only 2 of them are in print. And then there's just a ton on, lesswrong.com.
Wonderful. I'll check it out. I'll check it out. And I want to talk a little bit about now, because when I added you on LinkedIn, I saw hiring, right? And you're clearly building something that's, it's not easy to build in the space you're building. You need very talented people. How do you recruit people? How do you recruit highly intelligent people that could easily make, tons of money at, let's call it Jane Street, at Citadel, or even at a bigger, centralized exchange like Binance or crypto.com? How do you convince people to work for you and um, to join the vision in building what you're building?
Yeah, we care about having a super talent dense team. And I think, across the board for many years in software engineering, there was a mispricing of the most elite talent. Someone who makes $120,000 a year versus someone who makes $240,000 a year, just sort of multiplying by two. Two of those 120K a year engineers are not worth the one 240K engineer. This 240K engineer is 6x better or something like that. And I think this is like very topical in the news right now where Mark Zuckerberg is allegedly giving these $100 million compensation packages to all these, super intelligence, researchers and all these things, right? And so this market mispricing is clearly like being solved, and the OpenAI starting salaries are astronomical, and quantitative trading firms are also able to pay extremely well for the top talent. And so markets are efficient, like very very generally, but man, yeah, I really just care about having the most kind of elite talent dense team as we possibly can, and I think that sets a feedback loop where in the interview process, if someone taught ever if every interviewer in the interviewing process is super smart and kind hearted and interested and curious and just like a good, talented, smart, great person, then it sort of attracts that sort of talent. And so I think we've seeded a really great culture internally initially, and I think that kind of does really blossom. And then also I think I should write more in public. I mean, the way that you found me is kind of the way that a lot of our team has found their way to Kinetic, right? Is just me putting out random law tech documents about the particular things that I'm interested in. And so I think there's a sort of like nerd sniping effect or something like that about like putting out just like interesting technical content, and then you end up kind of bringing in that talent.
100%. Um, when I think about the way the world is going, and I actually, funnily enough, I saw an X thread on this recently. I think it was just a tweet, but I saw a take that I found fascinating. It's that average is gone. The median is, uh, quite honestly, if you're trying to work, if in the future you're looking for a white collar job, and you're in, let's say, the median technical competence, you're gone. Even top 20%, let's say 20th percentile to 10th percentile. I think that's gone too. I think right now we're still, if you're in the top 10th percentile, you're okay. But I feel like every year as these LLMs get better, that's gonna shrink. I'd love to hear your thoughts on that, and what you think. Let's say, let's speculate. 10 years down the road, 20 years down the road. Obviously, it's very difficult to predict the future. But yeah, if I believe that trend will persist, what is everyone else going to do if it's only the small subsection of the population that's unbelievably elite at what they do? What is there for everyone else to do, and how does that change, I guess, the societal economic fabric that we exist in?
Yeah, it's a crazy question, and this is something that has been, we've had this acceleration pretty much as long as we've had society, and the industrial revolution was sort of a version of this, and we're having this sort of hyper accelerated version of that now. I even think during COVID, man, all the kids who I meet that were high schoolers during this COVID era, it feels like it was such a variance increaser, where like the most cracked high schoolers were able to not have to waste their time in Spanish class or whatever, and they were able to get like extremely good at whatever talent they wanted to really hone. And so I think like those high schoolers, the top 1% of high schoolers are better than any high schoolers that like have literally ever been or something like this. But at the same time, COVID for other high schoolers, they just didn't have to study at all. Like there was no school, it was Zoom University. They didn't work at all, and so they kind of are falling behind, and maybe they're fooling around, wasting time. And so we are seeing the these kind of like poles come apart. So that's maybe not so great. As for I think this trend will definitely continue to increase. As for what happens to society, there are a lot of perspectives on this. I mean, there's the kind of Nick Bostrom. He wrote that book, Super Intelligence. And then recently, I don't know, in the last 2 years or a year, he wrote that book, Deep Utopia, sort of describing what happens in the sort of like super intelligent, slow takeoff scenario, and how do people find meaning in all these things. And so, maybe there's some answers there. But I mean, honestly, it's almost it's just a complete fog to me, and I wish I had more answers, but I think the next several years are going to be pretty insane.
I agree, and I think that I mean, Augustine said this. He says he doesn't really have any answers, and he would go as far as to say that anyone who claims to have the answer, like the ultimate answer, is mistaken because there's so many different ways it can turn out. I mean, even among top AI researchers, I think it was what like 10 or 20% think that the human race will face extinction if super intelligence comes about, and so there's so much disagreement about where this goes. Um,
Yeah.
final question. Um, if there's one piece of advice you could share, to someone young, let's call it, high school, university, somewhere around there, that you wish was shared with you, what piece of advice would that be?
Yeah. Again, this is maybe a case for, like epistemic humility where, I mean, we'll see how my life turns out, all these things. Like, who knows if I'm actually in the position to be, giving advice to, people, but, with, conditional on that, fact thing true, what would I say? What would I say? I would say advice that I wish I had gotten was to just like go psycho crazy, intense, hard mode, as young as you can. I think like, I think there's this like preschool education saying that like kids who, start ahead, stay ahead. Right. And I it could not be more true from what I've seen. It's, the kids that, actually worked hard, in high school and got into, Stanford or Harvard, like things have kind of just come easier for them, not having to work that hard and kind of later in their life and they get the fancy jobs and all these things. And then, I cared a lot in high school about like authentically learning and learning for life. And I was like, Spanish homework, I'm ragging on Spanish, but like I didn't care so much about that. Obviously, it, you know, turned out fine, and it's gonna be okay. But go super super hard. I guess I have like this authentic learning for life perspective, and I would like highly suggest that. But like get ahead as early as you can, and then you'll be able to kind of ride for a long time. But yeah, just go super hard.
Wonderful. You can just do things. That's
You
probably
can just
my
do things.
favorite.
Yeah, it's crazy, and like, eh, your peer set also changes. So like if you go psycho crazy hard mode and you do amazing things and all this stuff, like you're going to be around people who accept that and love that. And if your current peer group thinks you're crazy for, working at, midnight or something like that on a weekday, or you're tinkering with some AR glasses and everyone calls you a nerd or something like that, like tune all that out. If you love your AR glasses and you love hardware, you are going to find, the people who love that the most, and you're going to find so much joy. If you're a painter, like go hard on painting and you'll find your painting peers. Like the people are out there, there are 8 billion people in the world. Like you'll definitely find people who support whatever your passion is. So don't feel weird at all about going hard.
I love that, man. Thanks so much for coming on the podcast, and best of luck with everything for Kinetic.
Thanks, man. Yeah, it's been so fun.